And joining us now to analyze the forces at work on the markets is Elliott Gue, the editor of the Energy Letter and the Energy Strategist. Elliott, good morning to you, sir.
Good morning.
Let's start with oil today, a bigger than expected build, and is a bit of a relief to say it having a direct effect on oil prices rather than these outside influences like the strength of the U.S. dollar and other financial incentives?
Yeah, I mean, you're starting to see some of the fundamentals creep back into the oil market. We had seen some pretty big drawdowns and unexpected drawdowns in crude oil inventories and distillate inventories and gasoline inventories in December, in early January, and that kind of helped push oil back from the low 70s back up over $80. But you certainly did see some reaction yesterday with oil prices coming down in the wake of that report. Of course, they did recover some of those losses towards the end of the day, I think mainly because the stock market itself turned around. On some hope that the economy is showing signs of recovery.
Sales were down last month, so maybe that will turn around as well. I say a relief, and you call it a return to fundamentals, because over the last week or so, Elliott, we've seen demand for gasoline drop significantly with the heavy winter storms in the Midwest and the Northeast, and yet gasoline prices rose. Oil prices were still on the rise, so it's clear some outside influences are still at play overall, correct?
Yes, but I mean, if you look at the broader trend, we are seeing gasoline inventories starting to normalize a little bit, oil inventories starting to normalize a little bit. They've really been sort of steadily dropping with some blips to the upside, of course, but pretty steadily dropping across the whole OECD, all the developed countries, showing inventories coming from very, very glutted levels back to sort of more normal levels. They're still well above average, but that's been enough to sort of begin to put a bid under oil prices.
Since these prices right now, Elliott, at 79 and change a barrel, are right around where OPEC wants them, do you see that cartel as having an influence on prices overall? In other words, are the policies that group talked about over the last year or so still at play right now and clearly affecting international prices?
Well, they definitely are affecting international prices. And one thing that has changed a lot over the last 9 to 12 months is that early in 2009, a lot of those OPEC producers were really still reeling from the extremely depressed oil environment of late 2008, early 2009, with oil prices sort of in the 40s. So the compliance with those cuts was very, very high. In other words, most countries were abiding by their agreements and not producing more than they were allowed to under those agreements. Now we're seeing that compliance really drop, and what that is certain cartel members cheating, producing more than their quota, really just to take advantage of those higher oil prices. So one of the things you've been hearing from OPEC a lot is that rather than actually cutting production or taking a move like that, they would just like to see those existing cuts complied with a little bit better. But the temptation is when oil prices are a little lower, if oil prices were to drop back down into the 60s, I think you would probably see that compliance begin to creep higher again. But with oil prices around 80, there is a greater incentive to cheat. So that means that they can certainly have some sort of jawboning effects in talking about it. But if that compliance doesn't rise, they already effectively have increased production, even though they haven't increased their quota.
Let's turn to natural gas now, Elliott. And I mentioned the winter storms the U.S. has been dealing with over the last week or two. A clear cause and effect on natural gas prices because of the home heating needs?
Oh, absolutely. This is the peak season in terms of natural gas demand. There's a lot of expectation back in September, October that this would actually be a warmer than average winter due to the El Nino in the Pacific. But what it's turned out to be is that we're actually seeing possibly the coldest winter since 1977, across much of the United States. The jet stream has really been dipping down there and bringing a lot of Arctic air. Now we are seeing a bit of a warm up in the next 8 to 14 days. But on average, drawdowns have been a lot higher than average since early December because of that winter weather. And so what that started to do is it started to bring natural gas inventories from extremely glutted levels down to much more normal levels, back into sort of the average range. And I think we're going to see another huge drawdown reported today, possibly a record drawdown of over 260 billion cubic feet. And if that's the case, it doesn't take too many more weeks like that before we start getting inventories back to an average level, which if you ask most analysts back in September, October, everyone would have told you that inventories would be above average at the end of the heating season.
After so many months in the spring and summer of build after build in national inventory, right?
Absolutely, and in fact the build season, the injection season for natural gas, lasted a lot longer than it normally would, well into November, because we got sort of a late start to the winter. But since then, it's been bitterly cold. The other thing I think that will be important to look at as we move into March, April, May, and the data has been very unclear on this. We've talked about this before, but the EIA data on production, in other words, how much natural gas are we actually producing, has been very hard to interpret because of all the pipeline shut-ins that we've seen as a result of full storage last autumn, and weather-related delays, et cetera. It'll be interesting to see if we see a clear pattern of production declines emerging as we move into March, April, May. And if that's the case, declining production hitting at the same time when demand is actually reviving, you could see a more significant spike in natural gas prices.
Elliott, final question. You brought up the term El Nino just a moment ago. The latest report from the AccuWeather Service in Pennsylvania is talking about an El Nino-spawned isolated storm in the Gulf, arriving tomorrow, Saturday, sometime in that time frame. Potential effects that we're going to see on natural gas and oil production, because this has been an extremely quiet hurricane season. It
has been. It would be very unusual to see a storm, of that severity this time of year, but it's certainly not unprecedented. And it'll be interesting to watch if you start to hear any announcements from any of the companies that they're moving rigs out of the way, or shutting in production on some of their wells. It certainly could have an effect. Right now I would say it's going to be relatively minor. And the much bigger focus is on the winter weather, and whether we get another cold blast in February, as some of the models are currently projecting. But the thing to look for there is if you hear of any announcements from any of the major energy companies that they're moving rigs out of the way. I do think that there are a couple of things at work there. First of all, natural gas production from the shallow water Gulf has not really been a source of much growth in recent years. In fact, you've seen a major decline in the rig count there because of all the cheaper production coming from the onshore shale plays. The other thing is that after those bad hurricane seasons we had 4 or 5 years ago, these companies have really reinforced their deeper water rigs, in other words, their mooring systems and whatnot, to make them much safer. So they may not actually have to move as many rigs for a storm of this nature as they would have, say, 10 years ago. So I don't think it's going to be a major effect, and I really think that the weather in focus is going to be that winter weather and whether we get another sort of Arctic blast in February. Yeah, we're looking at 50s here in Washington, so I'm feeling better about it all the time. You can find a deeper dive into Elliott Gue's analysis through the Energy Letter and the Energy Strategist. Elliott, always good to have you with us, and we'll see you back here next week. Thank you very much.
All right, thank you.